Boom, boom. Haha. Traders, come on in. Welcome. Surprise, 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 guys. Come on in, guys. Make yourselves comfortable. Let's do a quick Q&A, impromptu live talk or live Q&A, whatever you want to call it here. I hope you're all doing well. I hope your trading is going well. I hope that gotten a great start to 2026. I think it's going to be a dynamic year. 2025 was, in certain ways. I think even 2026 is going to be even better. So we're going to see some interesting things developing in the world today. Markets responding in very interesting ways as well. And always, guys, always, there's opportunities to be found in any type of scenario, any during any type of world event. I think it's also important. I think it's become increasingly important for traders to become somewhat adept at uh, reading macroeconomic trends. This was not always the case. When I first started in the trading world 40 years ago, um, the need for having a macroeconomic view or stance for short term oriented trading really wasn't necessary. It wasn't as necessary, I believe, as it is today. Now, it might have given you an edge in certain rare scenarios, but today I think it's far more important to have your finger on the pulse of what major levers are being pressed and activated to see where your most dominant trends are. Money is bigger today than it was when I first started trading in the markets. Money was bigger. Um, money, money, money is bigger today than it was, and as a result of it being enormously bigger, rotation is a far more dominant theme today than being in the market or out of the market. So when the money is smaller, the choice is a lot simpler. I can be in the play, in the market, I can be exposed, or I can pull out and not be exposed. And for the most part, the vast majority of the world, even in the trading space, the vast majority of the world operated like that. But as the money grew, right? Um, you can't simply pull yourself out because what you have in is too big, is so big. So it's akin to, what should I say? It's akin to someone going in and out of a stock for 100 with 100 shares can be done at the speed of light. In 100 shares, out 100 shares. In 100 shares, out 100 shares. But if you take that to 10 million shares, you can't be in 10 million shares and out 10 million shares of a stock at the speed of light, not with the same ease, not over the same period of time as of 100 shares. So as your money gets bigger, it's more difficult to have it, to be either all in, all out, and to switch between the two so rapidly. So, what this necessitated over time was market rotation or sector or segment rotation. And so, instead of money coming out of the system, it rotates from sector to sector. So, because of this, it's become more important for even short term oriented traders to be fairly adept at reading major macroeconomic trends so that they know where the money in the market is likely rotating to or is rotating to at the current moment. And again, like I said, I did not, when I first started, I did not really have to keep my finger on macroeconomic trends like that. Macroeconomic trends in the past affected predominantly the bond market and your forex market, not which individuals didn't even have access to at that particular time, but more than equity markets. So interesting times, interesting world. I think that we have to also, in looking to the future, we're going to have to adapt to markets becoming available and accessible 24 hours a day. This is going to slightly change some of the dynamics in trading, but not a lot. And it's certainly not a lot in the beginning. It's going to be a slow and gradual adaptation phase to this, but it's coming and it's coming faster than most people think. And I've been calling for this for 30 years. In my first inaugural speech for the entire industry back in 1999, I think it was 98, 99. The crux behind my entire talk, which left a lot of people in shock at the time, was the full and complete democratization of the markets. And what I called for is a collapse in commission rates down to zero. Everyone thought I was crazy. We have zero commission rates. That doesn't mean that your trades are free. There's nothing free on Wall Street, but the commissions have largely gone away. I also called for um, the ultimate step of markets being available to everyone on Earth and being available all times of day at 24 hours a day. Everyone thought I was crazy at the time, all the way back in the late 1990s. Of course, we're seeing all of those things come true today. But wasn't that was a stroke of genius or anything like that. It's just the natural flow of things. Everything ultimately becomes commoditized. Inefficiencies get squeezed out, which leads to commoditization of most things. And barriers to entry tend to start high and then go lower and lower until there are no barriers to entry. And accessibility typically starts off in a limited form and then eventually goes to absolute total accessibility. And this is going to be huge for markets, guys, when you look out, because if you think about this, the US market obviously is, let's just limit what I'm saying right now to the equity markets. The US equity market, the stock market, dominates the world of markets, right? As far as companies and things of that nature throughout the world. Everyone wants to be listed on an American stock exchange. They want to be listed on others, but the key exchange, obviously, the key exchanges are in America. I would say 85% of all market activity really happens via the American exchanges. Um, so, where was I going with this? Oh, yes. But here's the key thing. Despite the fact that 85+% of all market activity happens via the US exchanges, a very small percentage of the entire world has access to the US stock exchanges. So think about that. Think about all the countries in the world. Think about the people who have $10 and say, you know what, I would like to put $5 into Apple. Do you know how many billions of people on planet Earth can't buy Apple stock? Can't buy any stock. But this moving to 24 hours and tokenizing all things is going to lead to the world having access, not just a certain corner of the world. This is going to send value through the roof. Do you understand this? That the value that we've seen grown over the years, over the decades, is with a small corner of the world having access. Think about the whole world having access, right down to 50 cents, 20 cents, 10 cents, all the way to $10 trillion. So, but this is the natural flow of things. All right. Great grin. That's funny. My grin is great. I love that. It's getting a little dark outside here. Let me lift my shade here. But okay, let me see what you've got for me here today. Um, It's good. Dear Oliver, you play the guitar. No, my son plays the guitar. Uh, so no, I do not. Always played the piano. Um, not anymore, but like all of my young life, that was what some of you know the story. Much to my mother's grin, I still don't play the piano. But that was my parents' dream for me when I was small, to be a professional pianist. All right. Any other questions? Is it a Epiphone or a Gibson? I have no idea, but I can take a look though. It's funny, guys. You guys are funny. You guys are funny. How's your trading going? How's everything going, guys? And how's the content? I hope that you are taking full advantage of the content that we post here every single day, guys. As I'm very fond of reminding you, we spend a great deal of time every single day making sure that some piece of content of value gets out to you. Something that I believe personally will contribute to you taking an additional step toward raising your level of market sophistication. And there's one thing I want to tell you about the content that I put out on this channel for you each day. Um, this is not third party content that you get. This is not Oliver Velez having read something in someone else's book and is regurgitating it to you in a different form. Every single thing that I share with you, everything that I put out to you is organic, it is authentic, it comes directly from this innocent space that is rooted in my 40 plus years of experience in marketplace. There is nothing third party about what you get. There is nothing that I'm sharing that I got from someone else. Because when I first started in this industry, there was no one else. There were no mentors. There were no teachers. There were no seminars. There were no events. There were no expositions that you go to. There were no courses that you could take. It was pure and simple trial and error. You either put money in and you made money, or you put money in and you lost money until you couldn't lose anymore and you were out of the game. And so that type of organic growth is very rare today because the vast majority of people who started when I started, they're just either no longer in the game, either from just retiring, blowing up, burning out, or what have you. But there are very few people that you can point to who's been doing this and that you can verify who's been doing this for many decades. So I do want you, I do say that because I want you to understand um, how appreciative you should be. And I don't want that to come across wrong. I don't want that to come across like I'm so, oh, Oliver wants us to pat him on the back. And while an occasional pat on the back is okay, that's not why I'm saying this. I'm saying it because you can take every little piece every day, like a little piece of the puzzle, and put it, link it with other pieces. And over a period of time, you have something really special. All right. You have something really special. All right. So visit every day. Make sure you take in those pieces every single day. Make sure you like the videos and comment. Your comments are great. I try to read all of them. Um, this helps the algorithm help us get the message out to people who are truly earnest in their search just to do the right thing. In a way, when I tell you that when I first started, there were no teachers and mentors or what have you, and that's a sacrilege. But I will say this, there are some benefits to that period as well, because I feel quite sorry um, for many young people in the business, not necessarily young in age, but they're young and they're earnest and they're sincere in their desire and search for just good info, good knowledge, um, good training, education. But today, that's like finding a needle in the haystack. Um, choose wrong, and you could lose years going down the wrong path. choose the wrong trainer, choose the wrong mentor who's not really true. You might not only be out several $1,000s or whatever it is, but you're out time, which is the greatest portion, the greatest value that you have. And you're also running the risk of building a foundation or building things into your innocent trading DNA that will be very difficult, if not impossible down the line to get out. You have to be very careful what you let into yourself. Do you understand this? You have to be very careful, and you should be skeptical. You should be hesitant, because once you allow something to get into your system that you start practicing and doing every single day, you can do it long enough and deep enough where it gets so entrenched in your DNA that undoing that is now impossible, even if you come to me. So protect yourselves and protect especially the early part of your journey. So for me, I did not have that issue because there was no one to follow. There was no one to take a course from. So that was the benefit of that era. Now, the benefit of your era is that you do have information, you do have knowledge available to you, that you don't necessarily have to rely 100% on trial and error in the dark. But now there's such a proliferation of nonsense out there that you have to sort through and separate, as the Bible might say, the wheat from the tares. You have to separate the good from the bad. But how does someone with no experience know what the good versus the bad is? And therein lies the dilemma, right? The trader with the problem, cannot select his solution. Have you ever thought about that? How can the problem say, well, okay, I'm going to select my solution. I think this one's not my solution, and I think this one is my solution. The problem cannot choose its own solution. And so a big part of this is luck. So I say, consider yourselves lucky for being here, that it's probably not by mistake, that by some level of maybe divine intervention, you're here. And again, I don't say that to be egotistical in any way. I say it because it's true. I'm going to stop now because I just continue to sound like I'm egotistical, but I'm not. I'm really not. But I do care about, those who were just like me. I made a promise that I would do my best to be a beacon light to those who were like me, that had the highest level of sincerity, that wanted nothing more in life but just to do this well. Nothing else interested me. Nothing fascinated me, which is why I've never done anything else with my life. I couldn't find anything else that held my attention and kept me captive and challenged every fiber of my being every single day, like trading did. And I wanted nothing else in life but to do this well. And I was sincere about it. I was honest and sincere and pure. And I sympathize with people like that. It bothers me that many times they're just taken down the wrong path. You know, $10, you guys sending me money for. I appreciate it though. Raul through is saying, how would you draw out the Fab Four if you were trading futures, since it doesn't close overnight? All right, that's a good question, actually. And there is a misconception that the Fab Four, there's a misconception that markets, some markets don't have an open. And in the way I interpret what an open is that even the Forex market, which you're talking about, or futures market, has an open. So even if a market trades 24 hours, guys, and let me see if I can find this for you. Maybe see I can show you a chart with this. Every market, even if a market does not have a specific open, like the market closes, the market opens, you can still find what I consider to be an open, which is a tight, narrow state. Okay. So let me just pull this up for you. Let me just pull this up for you here if I can do this. Okay. Do it like that. Oh. So I think what you should be seeing is a 2-minute chart of AMD, which is really a nice trade today off the open. So this is the open. So if you look very carefully, you will see, and do this. You'll see that this is the open on the 8th here. Um, and this bar is your opening bar. Okay. Now I want you to look at the state, what I call the state. The state is really a quick and dirty way of finding this, what kind of state your stock is in, is the distance between the 20-period moving average, which is the blue line, and the 200-period moving average, which is the red line, right? So notice the distance is very tiny. That's space. That space between your two key moving averages, the 20 and the 200, indicates that you are in a narrow state. Why this is important? The best trades of your life will come from a narrow state. And you can see AMD had a narrow state, boom, and had a very, very nice whale complete, or what I call a two-legged move, or whale complete. We call it in my program whale complete. So you want narrow states. Narrow states, narrow, flat. The flatter the state, the better. So here's a state that's wide, but let me do this for you. So here is a state that's wide, and here is a state that's narrow. This is an opening state. Narrow states are the same as an open, no matter when they happen. It can happen at midnight in a market. A narrow state can happen at 2 p.m. A narrow state can happen at 3 a.m. in the morning. All right. So even if your market doesn't have an open, you're looking for when your market goes to a narrow state. Now, if I can show you this, maybe I can find very quickly. I don't want to waste a lot of time here. But maybe I can find very quickly a narrow state that happens even during the day. Because you don't need an open. So all you need is the space. All you need is the space between your moving averages narrow. Even this could be considered a narrow state, 20 and 200. They don't have to be close, just narrow. And this is a wide state. All right. Now, if you throw the stock in there to create a 3-item narrow state, that's even better. So here's your 20, here's your stock, and here's the 200, and all 3 items are close together. Now you have the optimal narrow state. And when all 3 items are not close together, you have a wide state. But your best trades will come from a narrow state. See, your best trades will come from a narrow state. So if you can get this concept that markets go from narrow to wide, back to narrow, back to wide, back to narrow, if you get that simple thing, guys, star. That's one of the foundational principles. Get that right, and I can make you a star from there. Narrow to wide, back to narrow, wide, back to narrow. And you don't need a real open. You don't need a market to close and then open the next day for that. All right. You don't need that. You need just the narrow state. So I hope you understand that, Raquel. All right. Just the narrow state. And the 3-item narrow state, where all 3 items are close together, that's your open. All right. Awesome. All right. Uh, Admire Florist says you help in my trading in better way. Thank you very much, Oliver, from Australia, from down under. All right, welcome. Thank you as well. Thank you for being here. Love you, Uncle. Unc, love you guys too. We need this. Yeah, you too. Absolutely. These are the things, guys, that I wish, my God, someone taught me, showed me. And I want you to understand this too. And so I want you to understand this as well, that one thing, one seemingly small, simple thing can reward you, can actually pay dividends forever. Think about that. You don't even really need a lot of things in this game. You need a proper foundation put in place. Like the thing I explained to you now, narrow states go to wide states and back to narrow. That's a foundational concept. You need the foundational concepts. But once you got the foundation in place, now any small thing on top of that foundation can deliver a reward for the rest of your life. Like it never stops giving to you. It never runs out of its magic, its power, its income generating capability. Never. These things don't have an expiration date. They will work in any market. Everything I teach you will work in any market, anytime, forever. You know why? Because they're based on human nature. They're based on the 3 dominant, the 4 dominant psychological or / emotional states of all human beings. And those are the states that actually move markets. Markets don't move themselves, right? There's an impetus that moves the market. There's something that kicks into place before a market moves. That could be fear kicks into place, and then because of fear, the actions of fear follow. Selling, dumping, whatever, exiting. There can be greed, and because greed is first, then the actions that flow or follow from greed are buying, accumulating at even higher and higher prices. You have fear, greed, uncertainty, and ambivalence. A lot of people forget the 4th one, ambivalence. That's usually after a collapse, after a crash, and nobody cares anymore. They're hurt, they're disgusted, they're disenfranchised with the market. They're all the disses. That's ambivalence. When almost everything's been squeezed out of the market. But those 4 states will be with the human race forever, which means that the things that those states cause in the markets will be with us forever. And every single thing I teach you is based on those 4 emotional states. So as an example, I just talked to you about narrow state. What do you think a narrow state is? A greedy state? Or does narrow state indicate ambivalence? Which one do you think? Which one do you think? Let me see if I can get you up here. Think about this. Narrow state, you've gone from wide all the way back to narrow. What is narrow state? Is that closer to a greedy state or an ambivalent state? Because those are the extreme opposite ends, right? Which one? I know we're operating on a delay. I'll just take a quick sip here. Anybody know? That's right. An ambivalent one, where you've squeezed out the greed. The wide state is greed, or the wide state can be fear if it's to the downside, maximum fear. The narrow state is the moving back to an ambivalent state. So the market is always moving from ambivalence to greed to uncertainty to fear back to ambivalence to greed to uncertainty back to fear back to ambivalence over and over again. It's a cycle that cannot stop repeating itself. This is one of the foundational core principles that if you have this as one of the cornerstones of your foundation, the foundation of all of your trades, it's hard to be wrong very big. You understand? It's hard to be wrong very big. So what are you looking at? You're looking at your two main moving averages and the stock. Someone's saying, well, what are you looking at? I went over it, but we can do it again really fast for you. I can do it again. I don't mind doing it again very fast for you. So take a look at this. Smoke on this. All right. Take your 3 items. Look at your items here. Look at your 3 items here. You have your stock. I'm going to put a dot on, I'm going to put a circle on each one. You have your 20-period simple moving average here, and you have your 200-period moving average here. These are the 3 main items. Now, are they close together? No, they are wide apart from each other. All 3 items. That is a wide state. Okay? Now, contrast that to this. Here's your 20. Here's also your stock. And here's your 200. This is relatively close together. So contrast that to this. I'm going to put this in a column. Now look, narrow state, wide state. Your best trades are going to come out of a narrow state up or out of a narrow state down. You'll have to determine which one it's going to be, which one it is. But your narrow state can lean down or break out and lean up. But all markets do, guys, is do this. Look, let me show you. From narrow state up to back to narrow state like this, or from narrow state like this, down and back up to narrow state. And if you look at any chart, you see it going narrow state, wide state, narrow state. But what makes it confusing sometimes is that the levels are not the same. So look at your narrow state here. I'll show you. All of this is the same concept. Narrow state, look at how narrow the states are. The state is here. Wide state. We go back to the narrow state. We go wide again. We kind of go back to narrow. We start to go wide again, then back to narrow. So you had the wideness on the downside first. You went here too. See, so the confusing thing is that sometimes wide is very wide, back to narrow. Sometimes wide is less wide, back to narrow. Sometimes wide is even less wide, back to narrow. See? Now we're going wide this way. Back to narrow. Wide again. But every movement is really either this or that. What confuses people as well is when you are in an elongated that before it does its next one. So this can confuse. What can also confuse here is that sometimes the bottom is V. The bottom is a V sometimes. Sometimes the bottom is longer. So the bottoms can be different durations. The tops can be pointy. The tops can be flat or rounded like. So this one is pointy, more pointy. Okay. This one's more pointy. But it's still all the same thing. And it doesn't matter what stock you pull up. I can pull up Tesla for you. All right. You'll see it on the micro. You'll see it on the macro. Just shoot. See it all over the place. It's just the same thing repeating itself, whether it's in the macro form or the micro form. Right? Now you're going this way. It's the same pattern over and over again. And we number these. So this is 1, this is 2, stage 2, this is stage 3, and stage 4. So if you know how to identify stage 1s and 3s, you will be a wealthy market participant because your biggest moves are 2s and 4s, right? So for instance, those who knew that here's the 6th, right? Here's a 6th. Those who knew that that most of the 5th spent its day doing a 3. Here was a 2. Here's a 3. The following morning, late in the day you drop, the following morning continues the drop. The traders who knew this is a 4 bets down for the 4 to complete itself, because 4 always follows 3. Now, some people say, well, Oliver, no, 3 can go back into a 2, and they're wrong. So they say, no, but I see this all the time, Oliver. 1, 2, and 3, but this is not a 3. That's a pause. There's a difference between a 3 and a pause. So you have to be able to determine the differences between what a brief pause is moving into, this is still a giant 2. The same way, this is just a pause in your 4, right? So this is a giant 4. Here's a giant 3. Here is a giant 2. Now you're back to 1, right? Make sense? This is the only thing markets can do, guys. Can't do anything else. Up or down. Yeah. Finally caught a live one on the 2-minute chart. He's on a 2-minute chart. Yes, nice. Simple, but very powerful. This time is very, very, very powerful, guys. Like I said, just a few of these things, any one of these things can pay dividends for a lifetime, you know? And you don't want it too complex too, because what I get a lot of is, Oliver, it just can't be that simple. It can't be that simple. That's impossible. It is. Because, there's this misconception that the market is complex. And the market is a very, very simple beast. It's a very simple, if not primitive, market. It's a primitive thing. It's not the I always use this example. The market does not have the complexity of a well-built Ferrari engine. There's so many pistons moving and different moving parts, and the engineering sophistication to produce that sound and the torque and the da 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 da. Da. That's not the market has goes up, goes down, and it goes sideways. That's it. And it trades the same as it does for me, as it does for you, as it does for Warren Buffett. It doesn't switch up on us. Oh, I'm going to trade like this for Oliver, and I'm going to trade like this for Warren Buffett. And no, it's the same, and it only does three things over and over again, and it only produces one pattern: the bell-shaped curve up or the bell-shaped curve down. Like, that's very simple in nature, and it's very primitive. Human body is not simple, with billions of processes going on simultaneously. That's not what we have. We bring complexity to the simple market. We bring disorder. We bring lack of discipline. We bring lack of knowledge, lack of skill, lack of confidence. We bring all the things to paint the market what it is not. Because what it is not is complex. You are complex. What it is not is confusing. You're confusing. Right? And this comes down to a big psychological hurdle that so many people have. And I hate to wax too philosophical on you, but the market doesn't have money. You have money. The money is in you. The market doesn't have money. The bars I just showed you don't have money. You have money. The money is locked into what your actions are, how your actions are applied to those bars. Your actions unlock money or loss. The market doesn't do anything. So, in truth, you hold the money or the lack thereof, right? Mhm. Yes, this is recorded, guys. This is definitely being recorded. So, um, does my theory, all right, I wouldn't call it a theory, but I know what you're saying. Does it work on binary options? I'm not very fond of binary options. I'm not very fond of false markets, guys, that are manipulated and controlled not by natural forces in the market, and binary options are not. But with that being said, in any natural flowing market, everything that I teach you is based on fear, greed, uncertainty, ambivalence. So if those things operate in your market, it works. Just changing, you see, changing an item, putting a different item in the hands of a human being does not change the primitive emotional responses that every human being for thousands of years have had. You know, you fear doesn't go away because you say, okay, I'm going to switch this person from trading stocks to trading futures. Now fear will not be experienced. Really? Greed won't be experienced. Really? So I just want you to understand that every tactic, every technique is based on this that I teach you. It may not be explained that way, but whenever you ask, I'll let you know how it's connected to that emotional cycle. So tight and narrow is no fear or greed. It's been squeezed out of the market. Wide to the upside is greed. Wide to the downside is fear, right? Tight, real narrow, and flat is ambivalence. And your best trades come from ambivalence that explode into fear or explode into greed from the state of ambivalence. Tight, narrow, everything flat and tight, close together. And that's where you have the greatest potential. So you should try to become an expert at identifying ambivalence in every market, in any market that you trade. That's flat and tight. 20 flat, 200 flat, stock flat, or item flat. All three clustered together, boom. From there, you're going to have the most explosive moves of your life. And that is the truth psychologically as well. That's the truth from physics as well. When you take all the air out of a balloon, what's the only thing it can do next? Is air goes into the balloon. If you squeeze all of the water out of a sponge, every drop, tight and narrow, what's the only thing that can happen next? Is that it goes the other way. You just have to determine whether it's up or down. But you want to be a good identifier of that point. All the water's out. All the air is out. Everything has got back to base level, tight, flat, narrow. Now, which out of which end of tight and narrow does it explode? Up or down? You don't have to know in advance, just wait. Hmm? It's not rocket science. It's not rocket science, guys. You know? Someone's saying that, wow, I just missed a big move in gold and I'm pissed. All right, well, take a look. Now, what I want you to do, I'm going to put you to the side so I can see your comments here. What I want you to do, guys, I'm looking at your comments. Here, wait, see, over on the side here. What I want you to do is look at this gold chart. Someone says they miss gold. Find the narrow state. Find where the 20 period moving average was relatively flat. Find where the 200 was relatively flat. You understand? Find where the stock was relatively flat. And all three of those flat things were relatively close together. Now, you tell me when that was. Look at the dates on the chart. Tell me, find the flattest and the narrowest state. Tell me. Find it. You can find it on the chart. Look at it clearly. We're looking for all three items relatively flat and close together. Do you see it? That's right. You see it? There you go. 20, gold, 200. Now, this could have gone this way, but you don't have to know that in advance. It went that way. Now, bet that way from this tight, narrow state. Do you understand? You see this? Yeah, October 2020, October works okay too, but that's not flatness on all three items, which is your optimal when all three items are relatively flat and close together. So this can guys, you can apply this to anything, you know? Like anything, whether it's Bitcoin, whether it's stocks, whether it's futures, it really doesn't matter. So look at Bitcoin. Let me show you. Look at the tight and flatness. Then you go from narrow to wide. See? Now look at again. You see? So you're looking for when all three items are not that far apart from each other. And you have the wide states, right? You have the wide states. Does this make sense? Can you see this? Does this make sense to you? Let me know if this makes sense to you. Yeah, right? You can pick anything in the world. So, what I covered here with you right now, with just because of our friend's question, he threw $10 behind the question, which is very generous. I thank him. But um, when just this, you can't go so wrong if you know, am I in a wide state, narrow state, or in between on the way to a wide state? If I'm not in the state, did I just come out of the narrow state, up or down? You know, am I coming down from a high, wide state? Am I going up from a low but wide state? Am I just coming out of a narrow state to the downside? More downside. Have I left a narrow state behind and I'm now really wide to the downside? Reversal back up, right? Have I gone from narrow state to really wide to the upside and I've started to come down from way up there? More downside. You can't go so wrong when you know where you are in the cycle based on state. And this is what I talk about by getting the right principles, the right foundation in place, and building your trading strategies based off the right foundation. And I can make you a star. All right, guys, there you go. Love you guys to death, guys. I just wanted to do sort of like an um, impromptu talk here with you. Hope you don't mind. I did tell my team that I wanted to do more frequent lives here on YouTube. So you're going to be seeing me a little bit more frequently. All right, this year in 2026. All right, guys, love you to death. Stay close. Like the videos, comment, subscribe, click the bell in the upper right hand corner. All right, let's get this. Let's get the channel above 500,000 followers. Let's help some people out, okay? Out for now. Boom.